Guys are not here today. Monique's making you all look bad. She has not missed a day. Right, Monique? Uh, anyhow, I was going to have to be gone a half an hour this period, but I don't have to be now. We had a candidate for entrepreneur professor's excuse me, job. We even got food down there. I'll still eat. But he was staying with his parents in Huntington last night. He was out and got hit by a drunk driver. And I think he may have went to the hospital and didn't have to stay, so he'll be back next Tuesday. Uh, so I'm going to plan a test for next Tuesday, a week from today. Now, remember, we had a chapter on variances, and you're only going to have 2 or 3 problems on this test, and they're going to be doozies. Now, right here, for example, is one problem I've already got printed up and ready to go on the test. Well, there's Clayton, so we got 50% of the normal. Missing Jonathan and Cole, and of course Terry's always out. Guys, if you hear this tape, I need all of you out tomorrow night. We are full up now, and I've got 8 telephone calls that I'm going to have to turn down. Anyway, the first problem on your test, remember the chapter on variances? Better look over those good. One problem, but you've got to calculate the material variance, material price variance, standard quantity variance, total standard cost of direct materials allowed, actual quantity of materials used. We're going to do the direct labor rate variance, standard hours, total standard cost of labor, labor efficiency variance. Then you're going to do the variable overhead variance, standard machine hours allowed, the variable overhead efficiency variance, the budgeted fixed overhead variance, the applied fixed overhead variance, fixed overhead spending variance, volume variance, and total overhead variance. So you've got all of the material variances, all the labor variances, and all of the overhead. That's one problem on your test. Now, another problem on your test, problem will be prepare a schedule of cash receipts and disbursements for June. And then you're going to do a total cash budget. All right? And that's 2 problems. I'll probably throw out that one problem on collections and disbursements. So that brings us up to date. Now, we've had some gaps here in cost accounting with, we always cut it short anyway. I've always done that because they give me 3 classes back to back. I've got to eat something around 12 o'clock before I start tax at 12:30. And I've done that for 9 years, and nobody's ever fussed at me. I'm always a person that never tries to get out of work and never will. All right, now we've had 2 cost tests, and I guess everybody knows what grades you made on those 2. We plan on having 4. We will have one of them on Tuesday, and then the final exam. Now, on this test on Tuesday, it's 3 chapters, but I got to review what the 3 chapters are for you. Always mark my book. All right, I've got test 3, chapter 7, standard costing. That's the problem I just read you. I've got chapter 8, the master budget. And that's the problem I just read you. Now I'm going to try to get in chapter 9, break even. And we haven't done anything yet on break even, have we, Monique? Now, I can put chapter 9 on the exam, joint cost, capital budgeting. How about me not rushing chapter 9 today and Thursday? How about me just give you chapter, what, 6 and 7, 7 and 8? But those are wrong problems. You gotta do a cash flow and you gotta do all those verses. How about me just giving you test Tuesday on 7 and 8? And we go on Thursday with break even, that's okay. It won't be on the tape. Okay? So we're gonna do what we can today on cash budget, to try to finish it up. But I want you to be able to do a cash budget. And I haven't had many in class to practice in class, and not many do homework. I had 18 in class this morning, and your homework is counting as bonuses. Just do your homework. I'll give you a bonus. 5 out of 18 handed in homework. And principles. So, and I tell them that when they start in college, they made a pledge to not do homework. I shall not and will not do homework under no circumstances. And they're sticking to it. Whether it counts or whether it don't. Let's go to the end of chapter 8. And again, I'll put break even on the exam. That'll make the exam easier also by having break even on it. I think that's an easy chapter. And when I give you the test, of course, Tuesday, I'll have to be out a half an hour. Just have to make sure you sit at a different table, and I'll have to trust you. I'll be out a half an hour for this person coming in for an interview. I'm on that committee, and I've got to be there when he does a teaching demo. Okay. Now, in chapter 7, I'm going to try to look at a problem that might be more like the test. While I'm flipping pages. I would probably recommend problem 58 on problem 58 on page 295. I think we may have went over that, but I'd recommend that problem to help you study for the test. Problem 58, page 295. If you don't have that solution, it's on Moodle. And also problem 59. You can do 58 and 59, you got it made. And there's one thing I did not do on this chapter, is to cover very much how to do the journal entries, debits and credits. So I will not give you any of those on the test. Okay, now we're on budgeting. And we had a lot of little mediocre, I call them budgets, mediocre. All right. Mediocre means a sales budget. You can do that. Forecasting. Now, our collection budget, Monique, do you feel pretty good about if you take 50% down and you get 30% next month, you get 20% next month? Are you pretty good about that? And do you feel pretty good if we have 1% bad debts, we didn't collect that? Or do you feel pretty good if we got a 2% cash discount, something like that? So be careful with these budgets. I'll give you one straightforward. In fact, this one, I don't know if this is one I'll give you or not, but this one, you had year 1 and year 2. Year 1, you had November, December, then you had January, February, March. Now, here was your instructions for this one. This company in year 2 is expected that 40% of a month's sales will be collected in cash, with the balance being collected the following month. That's 60%, right? Of the purchases, 50% are paid the following month. 30% are paid 2 months later, and the remaining 20% are paid during the month of purchase. So did you get that? We're paying 20% down. We're paying 50%. And the next month, we're paying 30% the next month. Now here's the only little gimme on this problem. So for it's easier than any you had in the book. The sales force received a $2,000 a month base pay plus 2% commission. Now it would be hard to calculate commission. Then they've got labor expenses, and they've got other operating expenses, and even depreciation. That problem I just read you is easier than anything you've done for homework. It had no discounts in it. It had no 1% bad debts in it. So, all right, now we fiddled around with materials budget and labor budgets and overhead budgets and selling and administrative expense budget. So, Monique, what was our homework for today? All right, 54, 56, 57. All right, 30, 32, 34, 35. Now, when you look at these problems, they're all budget related somehow or another. I'm just interested in leading up to a cash budget. It's about the same thing if you were doing your budget for the year. How much money do I receive in January, February, March, April, May? Now, how often do you pay your car insurance, Monique? Every month? How about you, Clayton? Mine's every 6 months. How bad is it every month, Monique? How much?
70.
70 times 10 plus 140. That's 840 a year. That's not bad. That full coverage, not bad. All right, but if I were doing a cash budget, I would account for automobile insurance 2 times a year. My homeowner's insurance would be due in July. The automobile insurance would be due in May and November. So I'd have extra expenses. December, I've got property taxes once a year. So you got to look at those once a quarter, twice a year, once a year bills to put in the cash planning. Now, most of us know what comes in each month, what goes out each month. I don't know if I told you before or not, but I was good friends with this couple, and he worked for the railroad. If you work for the railroad, you make good money. And she worked for the postal service to deliver mail. She made good money. So they were both making about $100,000 a year. And this was 20 years ago. That was real good money. And they asked me would I help with the budget. I did their taxes. And I went back and did amended returns and got them back a fortune in taxes. They ran out and bought a big satellite for their TV and a new vehicle. Okay. So they wanted me to help them set up a budget. And I asked them about their income and expenses. At that time, they would go to a video store and they'd rent 5 movies. They had kids. They'd keep them for a week and pay all the late fees. He would go out every month and buy a gun, and they both smoked. So I was going to help them do a cash budget to see where they wasted their money. I mean, people making $40,000 a year were living better than these people making $100,000. But when I got to talking to them, they were not willing to give up the movies. They were not going to take it back on time. They were not willing to slow down on smoking. he was not willing to give up buying a gun every month. Uh, there were some other little things they could have given up, not a miss. So I didn't do a budget for them. So some people are not willing, or they don't want to know where all their money goes. They spent nothing hardly on entertainment or eating out, but they bought a lot of junk food. But now we all can waste money. Clayton, you know what I mean? Ways you waste money?
Like video games, like not really.
You rent them online?
Just buy. I mean, there's like, yeah, you can buy them, but the ones that are free usually has things that are inside the game.
That's what my little grandson does. He wants some money to, yeah.
So it's not really.
You waste any money, Monique? Well, I waste on scratch tickets. I may spend $3, $4, $5 a day on scratch tickets. Now, if I never win $5 a day, it's $35 a month. I mean, $35 a week. Multiply that by a month, that's 70, that's 140. And if you multiply that by a year, you know, that's going to be around $1,500, $600 you can waste on gambling. But I wouldn't do that if I never won, okay? So I try to stay even or a little bit ahead. If I don't, then I slack back up. But, well, no, you know, when you get married, you have a family, you'll waste money on certain things. That's okay to waste some. All right. I've told you before, there's two philosophies of money. One is eat, drink, and be merry, for tomorrow you may be dead. That comes from a Bible verse. It's quoted from the Bible. And Ben Franklin said, a penny saved is a penny earned. So there's two philosophies. I think you should save money. And when you go out there in the world of work someday, try to save up at least 6 months of living expenses. Try to. All right. First problem is number 30, I guess. Cash collections, accounts receivable. Now, total June sales are expected to be 450. Of each month's sales, 80% is expected to be on credit. So we're collecting 20%, 2080. The accounts receivable balance is 119, of which 90,000 represents the remainder of May credit sales. Well, the other 29,000 must represent either June or April. There are no receivables from months prior to April. The collection pattern of is 70% in the month of sale, 20% in the month of falling sale, and 10%. Well, that's pretty easy. What were total sales for April 2013? Total June sales for Roy's Catering expected to be 450,000. Now, how would you go about finding? They didn't flat out tell us. All right, let me find the solution here. You got to take the part that was on credit, divide that by that percent, don't you? Let me try to find a solution here. Well, do y'all see solutions for cost accounting here? That right here. By the time I asked you, I'll find them. Monique, what'd you get the answer for that first question on number 30? All right, here's what you got to do. You got to take your balance of May 31st. That's your credit. Now, remainder of May credit sales was 90,000. That left you April credit sales of 29.6. Now, percent of April sales uncollected at the end of May is 10%. You can divide that into April credit sales and get 296. Now, April sales on credit, 296. Percent of total sales made on credit, 80. Divide that by 80, and you're going to get April sales. That's sales on credit. This is April sales, cash, credit, and all it. So you had to work backwards a little bit. Clayton, do you have that next answer?
300,000.
All right, what were the credit sales for May? All right, probably had to do about the same thing, but it was shorter. Remainder of May's credit sales is 90. What percent does that represent? That represents 30%. So you were collecting that month. So if you divide 30 into 90, you get 300. Okay? And then on number 30 also, what are projected cash collections for June? Right now, you are doing real collections like we have in many problems. Okay, you take June collections of April, 29.6, already mentioned. June collections of May credit sales, 20% of 300,000, you calculate the 300, that'd be 60. 20% of, what's the 450,000? That's the June sales, isn't it? That's given. That's 90. June collections, 450,000 times 80, and 360 times 70. Total collection, 431.6. Y'all have that answer? Have that? All right. Then the last one is one of those short ones. Balance for May sales, 300 times 10%, 360 times 30, that's 138. June accounts receivable balance. Okay. On the test, you will have to have collections. So each of these problems are getting you used to dealing with percents and how they're worded. All right, number 32. Direct material purchases and budgeted payments. Materials and accounts receivable goes together just like sales. Sales and accounts receivable go together just like materials and accounts payable goes together. Prepare a purchase budget for the first quarter of 2014 and total and in dollars. Total in dollars. All right. All right. Units produced, those are flat out already given to you. 20, 50, 70, 70. 20, 50, 70, 70, yeah. These are already given. Now, pounds per unit, we need 2 pounds. So now we need 40,000 pounds, 100 and 140. Now, what's this E1 in pounds? Inventory in pounds? Okay, ending inventory. Okay. Ending inventory, we've got 25. That's what we want in ending inventory. We want 35, we want 35. We want half of next month's production. What's half of 50, Clayton? All right, here's 25. What's half of 70? And here's the 35. That's how you get those numbers. Okay, so we need They have 65, 135, 175. We'd have no beginning inventory in January, but we got this 25, which is ending, carries over to beginning, ending here, carries over to beginning. All right, so pounds to purchase, 65, 110, 140, 315. Cost per pound, 57 cents. Now, you will not probably be doing that on the test. We'll just have to know our payments. I'll give you the total cost of materials. All right, but now you may have to set up the payments on the test. We have to have 163. Let's see. Multiply 455 times 40%. See what you get. 455 times 40.
182.
Where does that come into play? I guess I better read B part. Determine the budget payment for purchase of raw materials for each of the 3 months of operations. Well, you got to buy for 455. But was there a discount? How much did you get, Monique, when you multiplied 450 times 40? What's 455 times 40? Now, do you get a discount on that? Do you get a discount on that 182? You better read it.
Oh, yeah.
How much?
10%.
Wow, 10%. Now, Monique, multiply that 180 sometimes 10%. Now subtract that 10% from 180 some. All right. Now, the easier way to get that, Clayton, take your calculator and multiply 455 times, let's see. I'm trying to find a shorter way.
It'd be
Probably times 36%. All right, now, the easiest way, not to get you mixed up, take 455,
yeah, you're right. 36.
take 455 times 40, and then multiply that by a decimal 90. Instead of decimal 10, subtract and multiply by decimal 90. Now, the way Clayton and I got that 36%, we were going to take out, all right, we're collecting 40%, right? But you get a 10% discount on that. What's 10% of 40%? That'd be 4. That leaves 36. So try multiplying 455 times decimal 36. Will it work? Okay. That's your shortest cut if you don't get mixed up with it. Okay, so now we've got a collection here going. Now, how about February? Now, what is 60% of 455? 60% of 455. How much? Oh, it's not going to give us this 277?
No, it's the one above it.
Oh, the one above, that's what I meant, yeah, 273, yeah. That's for another month. Okay, so can you follow those purchases? They weren't bad, were they? Okay, so we can move on and get to number 34. This is cash disbursements, sales, gross profit, decrease in merchandise inventory, wage expense, increase in wages payable, other cash expenses, decrease in accounts payable. Well, just what did money go out for? What are you spending money on? Now, if you decrease your accounts payable, you're paying some off. You're spending money. So this is what you do in a cash flow statement sometime. So A part, number 34, question. How much does Reeves Company expect to pay for inventory? Well, it's a different question than I thought. So if we take cost of goods sold, all right, let's see. If sales is 2.7 million, now if gross profit is decimal 40, what's cost of goods sold? If gross profit is decimal 40, what does cost of goods sold have to be? Decimal 60, don't it? So that's where you're getting the decimal 60. Now, decrease in inventory, you sold more than you bought, so we use this inventory and it's a minus. A decrease in accounts payable, we paid out money. So here is your cash payments for merchandise inventory. And that is something like you do on a cash flow statement direct method. B part, what are the total budgeted cash disbursement for September? All right, we got to add on inventory first. 1,611,000, and we got to pay that wage expense pretty much given to you, isn't it? Or is it? All right, how'd you get this wage expense, Monique? Given less increase in wages payable. We still owe these, don't we? We still owe it, so we didn't pay out cash for it. Then other expenses. So bottom line, how much are we paying out in cash? So that's just part of a cash budget, how much you pay out. And we're just looking at parts. We look at one problem, cash collections. Now we've got cash disbursement. Put them together, you got a cash payments journal. Okay? And that's the purpose of these problems today. And the next one is 35, the whole thing. All right. But here you're just filling in question marks. Clayton, did you try to fill in these question marks? All right. Let me try to get my gizmo here working for a second. So these online students, all right, that's what I call my gizmo. Okay. I have preached about my gizmo here that Brian brought me over, and I think Miss Grover's used it now. John Sneed, he wants one because he'll start using Service Pro, so everybody's going to use Gizmo. Now, we can use Gizmo here as a blackboard. I can stand right here and jot down a problem. And it's waist high. Before we had Elmo, I had to go over here and bend down to write on it. So it's better than Elmo. Gizmo is a step up from Elmo. And that's not a name, I just made it up. All right. What's the purpose of this? Why do you even have a statement that looks like this? What's the purpose? Well, the purpose is it learns you to work backwards and find mistakes. Here, you just add the two together, don't you? But here, 10 plus 8, 18. from 20,006. You should have what, 2,600 right there? Okay, so you should be able to fill in any of those question marks. Now, if we continue with May, how do we fill in? Here we got borrowings, acquired 0, paid interest 0, ending cash balance 72. All right, what's your answer right here? Cash available, needed.
3,800.
Are you gonna take 3,800 and add 4 to that? Are you talking about 3,200? I don't know. Is it 32, 38? What have you got, Monique? Let's see where that 38 comes from. This is 38. This is 7. What's this got to be? Cash. How much? 32. That's the 32. Okay. Now, that's just to make you think and to work backwards and to get used to a cash. Get used to the cash budget. Huh. Trying to close that booger out. They don't want to go anywhere. I guess I have to exit. I can't minimize it. What is this, 35? All right, check your answers in. We got down to here. I didn't put it all together. Total disbursement, 20,600. And you had to take, how did you get this first 3,800, Clayton? If you didn't have the 32, how did you get to 38? Now you got 38 right here. Would you do the 32 first? I guess I'd have done the 32 first then. I'd have took the 72 and subtract 4. I'd have got to 32, right? All right, now take 23,800 minus 20,600. What do you get? 23,800 minus 20,600. What do you get? 32 also, don't you? All right, so now minimum cash balance, we want 7. So if we got 32 and we want 7, we got borrow 3,800. I guess cash available needed. I guess we borrowed 4,000, and that give us ending cash of 72. Okay, let's just plug it in. So we can go on and leave that to 54. If you work these problems, you will not have any problem on the test on this case budget. $54 is a whole cash budget, isn't it? Whole cash budget. Okay, Clayton, you have this budget. Do you have number 54?
I do.
You have it, Monique? Now, I'm going to let you use number 54 on your test on Tuesday. All right? And Anybody else that has it or cares to bring it or do it can use it on the test. So I'm not gonna make any difference in those not here. Okay, so 54. Are you leaving for the day?
Yeah.
Um, See you tomorrow. What time you coming in tomorrow? All right, sales 900. Again, the accounts receivable 0, total 900. Ending accounts receivable 75. Collections. Now, was that just is that a plug-in number? You didn't have to do the month by month collections? They did this one, well, no, they didn't either. This one was set up different. You didn't have to do the collection. Unit sales, 10,000. Required ending inventory 2, so total needed 12. In inventory at 0, production 12 times $20 for direct materials, 240. Delayed payment is 20, so you're gonna pay out 220 in cash. And you're gonna collect 825 in cash. Your test will be different from that. It'll be more like the one I told you about a minute ago. But now your cash budget hardly ever changes. When you look at the whole picture, you've got collections, total. You've got disbursement for materials and labor and overhead and fixed costs. All right, that gives you cash available of -5. Payments to creditors are -95. Now, you gotta do some money here. Okay, Monique, have you had finance? You, Clay? Okay, Clay, I said, Monique, we've already done your schedule, haven't we? Clay, I wanna go do yours. Be looking at it, thinking about it, huh?
I think you said Wednesday at 11, like,
Yeah, anytime 12. It's 3 o'clock, so you won't be here too long for 5, okay?
okay, three is better.
Yeah, 3 o'clock, go to the office. Okay. Um, so Monique, this question. In finance, have you talked about a line of credit? You know what a line of credit is? All right, a line of credit is, you go into the bank and you set up a line of credit. If you're in a car dealership, you need to do that. And maybe you set up just 100,000, but you're not gonna pay the interest on it until you use it. Let's say 2 months later, you go to a car auction and, you buy 5 used cars, totaling 40,000. You just call the bank, you can write a check to that auction, 40,000, call the bank, they'll put your 40,000 in your account and start charging interest on it. My financial advisor at one of the banks advised me to get 100,000 line of credit. I didn't need it. And I got it, I still didn't need it. I was not going to go out and make that kind of purchase anywhere. But I need to pay 100,000 down. All right. But when it came up to, I don't know if it's some kind of something or another, that lady liked it. Because that $100,000, the bank had a lien on my property. If I went somewhere else, I was doing business. sell it. I got $100 line that I'm not even using. So I had them get rid of that line of credit. But line of credit for a business is good. For certain businesses, if you had to go buy furniture, if you had to go buy merchandise inventory of any kind, you don't have the cash, a line of credit is good for that purpose. But a line of credit is definitely good for this purpose because you don't want to write out bad checks for direct labor, do you? That'd be bad morale to give your employees bad checks. So you got to plan for getting that money from somewhere. And the plan in beforehand is better than coming up, hey, I can't pay payroll today. I can only pay part of that. I'm going to be 95,000 short. Too late. Establish that in advance. Now, where do you have to borrow? You have to borrow here. $2,015. Year you had cash available and you paid that out to creditors to pay this off. Anyhow, line of credit is an important concept in that problem. Okay, Monique, you also mentioned 56 and 57. All right, so if you worked all these cash budgets, you're Clayton, and I said you would use that one on your test. There's no reason you miss the cash budget. So be careful though. It depends on how I present it. Here we got sales, material cost. What's that, 50% of sales? Evidently. Materials received this month, 40% of what? 2,000 would be 800. Next month's cost, 60%. 60% of what? What's that 1,080, 60% of, guys? The ideal, try 60% of, I don't know if that'll do it or not. Try 60% of 2,200. I don't believe that'll give it to you. Will it? It says next month's cost 60%.
That gives you the 30, the next one over. That gives you
Oh, that's right. Okay, that's right. 60% of next month's cost. That gives you this one, doesn't it? I went ahead. I need the 60% of 1,800. That should give you 1,080. Okay. Yeah, I skipped a month ahead. I don't know why I did that. Okay, now material payments. That's 80% of what? 80% of prior month's goods. So what's 1632 80% of? You got that one, Clayton? All right, I know that 80% and 20% of something gave you 2008 right here, right? Where's that 2008 come from? Where would 2008 come from? What? Up where, Clayton? 2312 and 26.2. Prior month's good. Huh? Prior month's goods, 80%. So that's 80%. Your prior month would be April. So this is 80% of what number here in April? What?
240.
All right, wait a minute. 2040 March. Right here? All right, let's see what it says then. 80% is prior month's goods, and this was your total receipt. That's 80% of 2040?
Yeah.
Huh. Okay. And this would be 20%, 2040? Okay. And then we've got administrative expense, salaries, 1/12 of annual, 1/12, property taxes, 1/4, that's every 4 months, insurance once a year, utilities once a year, and total expenses. That's what I was warning you about. Some things are paid once a year, some things are paid quarterly, some things are paid monthly. And not many people pay their insurance bill monthly. I guess it's okay. Things have changed. It used to be a year, it used to be 6 months, but okay. All right. One more to look at real shortly. It's 57. That's comprehensive budget. Prepare sales budget, production budget. Okay, now on this one, I'm going to take up number 57 on Thursday for a bonus. I'm not going to go over it today. All right. And you're going to read the next chapter for Thursday on break even. And that's your major assignment. And then I'll tell you what problems are on the test Thursday. Okay, a test. 1 week from today. Cole, Jonathan, Terry, Savannah, I believe that's it. Hillary.